Okie doke. So we're gonna finish up chapter 3 today. I will answer any questions that you guys may have concerning the homework or other, if you want me to go through other examples. I know the Social Security calculation can be kind of cumbersome. I also know I had sent out a message to everybody on Connect regarding the tax return problem, not to forget that there is qualified dividend income as part of that problem, and so you're gonna calculate that income, the tax on that income separately, and then add them together. So just kind of a little reminder of that. Before we get started, does anybody have any questions? No? How's the semester going? Oh, okay.
I plead the fifth.
Huh? What's that?
I plead the fifth.
I still didn't hear you, sorry.
I said I plead the fifth.
You plead the fifth. Okay.
So,
Dave Chappelle.
okay, question for you. I know that this was like totally last chapter, but I was a little perturbed about it when I turned in the homework.
Uh-huh.
So, on all of the papers that we look at,
Mhm.
all of them, the tax tables, the 1040, it just says qualified widower. In chapter 2, the very first question, it says filing statuses, and I unchecked the qualifying widower with dependent child because that's not what the paperwork says.
Okay, so anytime, so what, on the tables and the schedules and all of that, married filing jointly, and you'll see there is an asterisk on there, like on the table, and if you look down at the bottom, it will say that it includes married filing, or includes qualifying widower or widower.
Right.
So, yeah.
Right, but I got points wrong because I unchecked, because it says qualified widower with dependent child.
Oh, with dependent child.
Yeah.
Okay, well,
I mean, I know you have to have a dependent child to be a
Yeah.
qualified widower, but like,
okay, so, I mean,
I know that was last chapter's homework, but like, I was just talking to her about it. When I submitted it and it said that I got that wrong, I was like, that's not fair, because on everything that we look at, it says qualified widower, that's it.
Okay, and so it said with, okay, I'll have to look at that question. I can't picture it in my mind.
Sorry.
To see what the word is. That's all right, you can vent. Tell me about your feelings. And so I'll take a look at that, Kelsey. Any other questions? Yeah.
So I have a little bit confusion for married couple and married couple feeling separate and feeling joint, because sometimes in a homework I'm seeing married couple. So
Okay, if it just says married, you can assume it's married filing jointly. It will specifically say married filing separately. If it's married filing separately, you really don't have any, I don't know if you have any problems that involve married filing separately. I mean, you might, some of those, like, you had a list of different, you know, you've got the one question and then it's got like 8 different calculations that you have to do. But yeah, if it does not say married filing jointly, I'm sorry, if it does not say married filing separately, it is married filing jointly,
oh, okay.
okay? Yeah, sorry, I didn't make that one
Because
clear.
sometimes I'm seeing married jointly and married, and then sometimes I say couple, married couple. Don't say
Married couple, but
anything.
it doesn't say anything about jointly or, yeah, I know,
So you
they're,
can use separate, you can use joint, because
yeah.
it's
So
supposed to be
use joint
separate.
unless it, yep,
Yeah, sometimes.
yeah. Any other questions, concerns, gripes? I'm sure you got lots of them, but that's all right.
So chapter 3, I mean, I know it's the extra credit, but the only reason I'm thinking about this, so because they have no W-2 income,
Mhm.
they're, what's the word I'm looking for? It's like the PGI? Is that what it is?
AGI?
No.
AGI?
No, it's the, like, it was in our books. I was just looking at it. Provisional income.
Oh, okay.
That doesn't go on the 1040 at all.
The provisional income will not go on the 1040.
Okay.
No. The provisional income is calculated in order to determine how much of the Social Security benefits is gonna be taxable.
Okay.
Yes.
That was super confusing to me,
Yeah.
because I was like, okay, I have the provisional, I was like, where does it go?
Yeah, it doesn't go anywhere on the tax return.
Could we go over some practice things on how to find provisional income? Cause I've got just by like trial and error, but don't really know how to get there like on the first go.
Sure, yep, absolutely, we can do that. I think we'll have time afterwards. Any other, I kind of figured that Social Security would be one of those, that and the dividend. Taxability of dividends, okay. We'll finish up here, chapter 3, and then we'll get to some of those questions. So, we have some other types of income that do show up, so remember, all income has to be reported unless it's specifically excluded. So you can assume that any income that you receive is gonna have to be reported. Some of these items don't necessarily receive like a reporting form, like a 1099 or a W-2. Sometimes they do, sometimes they don't. But even if a 1099 or W-2 isn't received, the income still has to be reported. Okay, this is just kind of an example of some other types of income that you may encounter. So jury duty pay. If anybody ever served on a jury?
I was summoned over the weekend.
You were summoned over the weekend, congratulations. So if you serve, you will get what's called jury duty pay, and it is taxable. It's supposed to be reported, not very much, and they'll give you mileage as well. The mileage is not income; that is a reimbursement for expenses. But the jury duty pay itself is taxable. Now, if you are an employee and you have to turn that, so employers are supposed to give you time off for jury duty. That is a requirement that they have. But if you have to then turn over the income that you receive for jury duty pay to your employer, which sometimes they'll make you do, then you don't have to report it. But because you didn't actually receive it, right? But jury duty pay is one of those categories of income that oftentimes you don't get like a 1099 or anything for it, but it is required to be reported. Prizes and awards. So employee awards would be included in the W-2 income. So that would be listed there on the W-2, and you know it would go on that form. Now, if it's from some other source, I don't know if anybody ever go to the casino or anything, played lottery, that sort of thing. Okay, so the requirement for those prizes and awards is that if the amount is over $600, they have to issue you a 1099. So the 1099 would then be used to report that income. But even if they don't issue you the 1099, those amounts are still taxable and are supposed to go on the tax return. They are listed under other income, and I'll show you here in just a second where they would show up on the Schedule 1. Forgiveness of debt. This is kind of an interesting one. So sometimes individuals will negotiate to be forgiven certain debts. Don't even think about it with student loans, it's not going to happen. But other types of debt, it is a possibility. So mortgages are one of those areas. Credit cards, that sort of thing. Car loans, not so much, because usually they'll just repossess your car. But if you are forgiven that debt, that is, you've received an economic benefit, right? If you had a $10,000 debt that you're supposed to pay, and now all of a sudden you don't have to pay it anymore, you're essentially $10,000 richer, right? Think of your balance sheet. Now your liabilities are less. That means your equity has gone up. That forgiveness of debt is taxable. And ordinarily when it happens like through a credit card or some other financing instrument that, you know, like a bank will issue a 1099, called a 1099-C, that is issued that will show the forgiveness of debt. Now there are certain circumstances under which individuals can be relieved of that tax burden from the forgiveness of debt. And I don't really want to go into the details of it, but it has to do with whether you're insolvent or not. So essentially at the time, right before your debt, if it's forgiven, if you have more liabilities than you have assets, and chances are that is the case, because usually they won't forgive your debt unless that is the case, then the forgiveness of debt is not taxable to the extent of your insolvency. So if you had $10,000 forgiven, and you are insolvent, meaning in the hole, by $8,000, then only $2,000 of that debt would be taxable. Okay, so but forgiveness of debt is one of those areas, and it's one of those areas as well that a lot of people aren't aware of. They're just not aware that that is something that is taxable. I've had many clients that had come in with a 1099-C, and they're like, what is this? Well, you had some debt forgiven. It's taxable, unless it meets one of the requirements to be excluded from taxability. But that is another area of other income that would be. Insurance proceeds. So normally most insurance proceeds are not going to be taxable because normally insurance is paying for some sort of loss, right? You've incurred a loss. If your house caught fire and it was worth $100,000 and the insurance company sends you $100,000 to rebuild or do the repairs, you're no better off, right? Economically, you're at even. So in that case, those insurance proceeds would not be taxable. Now, if the insurance company sends you $120,000 and the house was worth $100,000, now you are economically better off. And in that case, the $20,000 would be considered taxable income. So in most cases, though, insurance proceeds are not going to be taxable if it's just to replace a loss. Life insurance is not included. So if life insurance is never taxable to the recipient. If somebody passes away and you're the beneficiary of a life insurance policy, that is not something that is ever going to be taxable to you as the recipient. Okay, so just a couple of different scenarios. So remember, all income is taxable unless it's not, and they will tell you if it's not. All right.